Hello. In this video we are going to address two important news that occurred in the financial systems last week. The first one has to do with the Swiss National Bank. This past week a piece of news has been published that we must pay close attention to because it is revealing of the behavior that the Federal Reserve System may display in the coming months. The news is that the Federal Reserve System has had to urgently lend $3.1 billion to the Swiss National Bank. It has done so within the framework of so-called swap operations. These operations are common between central banks, but as you can see in this graph, Swiss banking has done this twice in 2022. In the first, it has requested $200 million, and in the second he has asked for $3.1 billion. Then what is truly significant is the amount reached a historical record. Why has the Swiss National Bank requested so much money? Most likely to plug holes in the interbank, that is, Swiss banks need dollars. And if Swiss banks need them, it is not unreasonable to think that practically the whole world needs them, as you can see in this graph. JP Morgan admits that the world is short in dollars. That is, that people have sold them and with those dollars have bought local currencies. With the price of the dollar now rising against local currencies, a lot of people are at a loss, and as you can see on this chart, JP Morgan admits that the volume of short positions is $18 trillion worldwide. Then it can be said that the world is short in them and experiencing great losses. To understand what is happening, we are going to look at the Swiss National Bank. The Swiss National Bank has an excess of Swiss francs. It has a trade surplus in the country, so it tries to sell Swiss francs to stop the rise and appreciation of the Swiss currency against European ones and especially against the euro. The Swiss National Bank, apart from having US Treasury bonds, for the SEC is like an investment fund in which, with Swiss francs, it invests mainly in FAN, Facebook, Netflix, and Apple shares. So the Swiss National Bank, before making an emergency loan of this magnitude, has previously sold what it could of bonds and sold what it could of FAN. This is why technology stocks have fallen sharply. The Swiss National Bank has had to be one of the real protagonists in this selling wave, and also of bonds. The problem that bonds now have is that the market is broken because the central banks have been selling bonds to obtain dollars, and an example of this is the Swiss bank. What is happening is that we are already at a point of no return, and the proof of this is that the Swiss National Bank has already had to resort definitively to the Fed and has had to assume this cost of reputation. Therefore, the conclusion to which we must arrive is, the world is short of dollars, and the dollar is in an upward trend due to the Fed's policy with the rise in interest rates. So it is going to be the dollar that is going to put an end to the rise in interest rates by the Fed, given the risk of breaking the financial system. Let's analyze the monthly chart of the dollar index, that is, the index of the dollar against a basket of currencies. As you can see, a first wave unfolded from 2012 to 2015, when it reached the 100 zone. Subsequently, the dollar index moved sideways from 2016 to the lows at the beginning of 2022. That sideways movement experienced since 2016 until 2022 between the 102 and 90 zone. In traditional technical analysis, they are called flat patterns. If you take into account the rise experienced by the dollar index from the lows of 2012 to 2016 of 26 points, and now we add those 26 points to the lows of January 2022, it marks a target of the 120 zone. Therefore, the dollar, from the point of view of a simple Elliott wave analysis, it marks a target of 120. Returning to the monthly chart, At the 120 zone, there is significant resistance. Therefore, we are going to assume that the dollar continues to rise to the 120 zone, and that is precisely when the dollar stops, or when the Federal Reserve System, seeing that the dollar reaches such high levels, slows down or begins to reduce interest rates. Given this speculative framework, at that moment the stock markets will rise and the bonds will rise, and it will be the dollar and not inflation that causes the Fed to change its criteria and begin to reduce the interest rate on the dollar. The second piece of news has to do with the spread of the financial crisis in the UK. Over the past week, we have seen that there have been tremors in the British financial system. The question we are all asking ourselves is, can what is happening in the UK happen in other countries? To answer this question, we are going to look at the following facts. First, what triggered last week's move? What triggered the movement is that the new British government presented an expansive fiscal plan, basically consisting of lower taxes, increased public spending, that is, an increase in the deficit. And the Bank of England is not willing to buy this new public debt issue, and therefore, the price of public debt plummeted. The interest rate increased and the pound depreciated. However, this is not an isolated event. What is the trend? Let's see the graph. Let's take first the graph that shows the evolution of the pound against the dollar. You will see that the trend is bearish, and the only thing we have seen precisely is that as a result of the decision of the UK government and a temporary emergency purchase by the Bank of England, the pound has rebounded, but its trend was already bearish. Now let's look at the graph that shows the evolution of the price of the 10-year bond in the United Kingdom. As you can see, its trends are clearly bearish. In other words, regardless of the fact that at a given moment the new UK government presented an expansionary plan, the trend was already clearly bearish. Is an expansionary economic policy good or bad? It fundamentally depends on an indicator, and this is the level of public and private indebtedness, specifically the level of total indebtedness of the economy over nominal GDP. And therein lies the difference between the current expansionary policies and those carried out by Thatcher or Reagan in the 1980s. We are facing a new economic model of expansionary policies in environments with high public and private debt ratios. And what is the objective of the government? In these circumstances, it must be clear to reduce said debt ratio, increasing its denominator, that is, the nominal GDP, that is, the product of liquidity of real goods produced by the price. So there are two possibilities: to increase the country's real assets, which is very complicated, or to increase the prices of those goods, that is, to increase inflation, which is much simpler for governments. Central banks oppose these government policies with contractionary monetary policies, which results in a confrontation that, in the case of Europe and the UK, the governments are winning. An example of this is Germany, which has decided to increase public spending by 200 billion, violating all the principles of the European Union and confronting the European Central Bank, finally allowing it to do so. In the case of the United States, the Federal Reserve has not yet capitulated, and that is the reason why the dollar is still stronger. What is the level of inflation that governments want to reduce? The total debt ratio, GDP, between 4 and 6%, with scenarios in which central banks will allow higher levels of inflation. From the speculative and investment point of view, it is very likely that companies, especially in the renewable energy sector and in the defense sector in the case of Europe, will be favored by the government with an increase in investment, a reindustrialization that would make these sectors a good investment. Regarding the public debt, Quite the opposite. It may give the impression of high nominal returns, but the real returns will not be high due to high inflation. In all this, gold will be greatly benefited. Although at the moment gold has not risen against the dollar, if you compare it with the pound, with the yen, or with the euro, you will see that it is behaving very well and that the trend is upward. Thank you for watching, and if you found this video useful, please consider supporting the channel by subscribing, liking, and sharing. That will help us a lot. Greetings.